Hey folks, so welcome to another weekend update from Charting Star. I'm Joe. It's Saturday the 30th of July and I will guide you through the DAX, the Dow Jones, the S&P 500, the Nasdaq, and if I have some time left, I will also show you a few charts from the big tech companies. They all had earnings last week and it didn't really how they came out. The market just pushed the results up except Meta. We're going to start off with the I sentiment. It's basically the retail sentiment for the US markets, and I was showing that thing here like 3 weeks ago when we had that very bearish reading, over 52% on the bearish side and less than 20% on the long side. And I mentioned that that thing needs to equalize for the market to turn around for another drop. And as long as this doesn't happen, most likely we're going to see another rally, and kind of an intense rally to rebalance that sentiment. And that's what happened. I mean, the sentiment didn't really rebalance that much yet, but you can see 3 weeks later we are back in the 40 areas, and we are getting close to the 30% on the long side, but that's not enough. We need to see here like a 3, like into the 30s, and the same on the long side, in order to have a proper turnaround again in the market. So I'm still convinced that we are in a bear market rally, and which is probably about to finish at mid-August, and I think that push we are seeing right now will continue for another week or two. And here you see probably a reason what's happening right now. You see the so-called smart money here on the bottom. Up here is the Dow, and have a look at that ridiculous rise of smart money started from mid-June until now. So for the last 6 weeks we had a significant increase of smart money flow in the market. So that's actually triggered by them, and so they did exactly opposite what the retailers did. They just bought everything, and but the other thing is, if you ask me, the market didn't rise as much as the smart money, and you see that divergence here. And let me just get my lines out. From the latest highs we had here and in the smart money here, you see there's a significant increase, and the Dow Jones didn't even get up there yet. Even when you have a look at these highs here, you see it overtook these highs as well, and the Dow Jones, it just didn't. And we call that so-called negative divergences of the smart money. So there's most likely that it will continue to rise, but the smart money probably will start to decrease, to decline, before there's a bigger drop in the market. Smart money, there will be a drop as well, but not as much, and then it might pick up again at smart money here with a higher low, and the Dow Jones probably will make another new low, and then we get the so-called positive divergence we are going to look for. And let's hop into these charts. So what you see here is a German DAX on a 30-minute time frame based on the cash market, etc. And I was posting this chart on Tuesday afternoon on Twitter, and I gave you these two possible descending broadening wedges, the one in blue and the one in red. And I also mentioned these two are like typical consolidation patterns in their upcoming rally. I gave you that positive RSI divergence. That means we made a high, a lower, a low, a lower low, and on the RSI exactly opposite happened. So that's a positive divergence. And I also gave you that track, and now we hop over into the charts, and that's what happened until Friday evening, and the market closed at 13,484, and as you can see, the blue one got activated here, the red one just got activated via a gap, and we reached already the first statistical target of the blue descending broadening wedge, and there are plenty more up targets here all the way up to 13,672. That would be the 100% target of that red pattern. So that worked out quite well. I was also mentioning a long trade here on Twitter, and that worked out quite well. That gave you already over 400 points within a day. So I hope you participated in it and took some profits out there. I did, and I just left my positions over the weekend because they were in great profit already. So let's hop into a 4-hour time frame. That's our short-term cycle chart, also based on the cash market. You see here these 10-day cycle brackets, and I was also twittering on Tuesday that this low we see over here is most likely to be the low of that cycle on the early side, like this one here, and this one was spot on. But we had now 2 cycle lows on the early side. They were within the tolerance of that low. You have to give it like 1.5, sometimes up to 2 days. And so we started rallying from here. I said once we overtake that, once we break through that blue zone, we most likely get into that yellow zone, and that's a new resistance. And you see it consists out of 250% retracements, and there is probably another pullback before we continue to jump further up. The next chart we are going to have a look at is the VDAX. So it's the volatility index of the DAX, it's the VIX of the DAX, and I was showing that chart somewhere here, and I gave you that black track, and you can see it worked perfectly fine. We most likely see another drop in volatility until we hit that green line before it comes back up, or we probably will park here for a few more days before volatility is picking up again in August. And just have that bullish Wilbur wave wedge in mind. That target line looks quite nice, and just imagine what happens if we jump all the way back over into these 40 areas. That was the last big drop in March with that Ukraine thing, and that could happen again. So have that volatility spike in mind. And you should know by now what usually happens to the stock market once volatility is picking up. And that's the weekly chart we're going to have a look at now. And I just wanted to show you that cycle here. It suggests the upcoming low. It's just a sub-cycle, but it suggests an intermediate low at not next week, the following week. So also have that in mind, that we probably run up here a bit more before we come down, and then we need to have a look if it's just a corrective pullback for another rally attempt, or if they come back even further and start that drop already in early August. We just need to have an eye on that. So that's about the DAX. I'm going to continue with the NASDAQ. So we just jump in, and it's a 4-hour time frame. I was posting that triangle somewhere here, and I was basically predicting that we are running, that we are going to see a pullback after we have that third touch here on that upper trend line. There's most likely a pullback, even a sharp pullback to that lower trend line before it comes up again, but it just pulled back and fired straight up. We reached that statistical target of that triangle quite early, came back, retested that line, and now we are back in that territory where my overall corrective move as an ABC correction finished off here already. And there's still that 100% target open at 13,061, and if we go through there, there's most likely, actually now once we are into that green in that green area. They're at the 13,225 or even 242, most likely in the NASDAQ. And I was showing these channels here also quite early. I was twittering that yesterday, that I was posting then somewhere here. So I was basically the first one who gave you that same thing on the S&P 500, the Dow Jones, and even NASDAQ. We confirmed that channel perfectly on that first hit on the 22nd of July, came down, and now we broke out. And I also gave you a very good long entry somewhere here. If you were following me, it gave you, over 900 points already within a short amount of time. And also mentioned that we most likely break out of these channels to the upside. That's what happened at the Dow Jones as well. I believe the S&P as well. And we are going to have a look at the daily now. This is a daily chart based on the cash market, and I gave you that so-called cup and handle pattern, and it broke out here, came back, pulled back to that 50 MA, and then I said once we break out there, because I gave you that example here, once we gap or like break through that 50 MA, most likely we're gonna touch the 100 MA as well, and that's what happened. And I really liked that idea, because that statistical target of that cup and handle pattern was right here as well. So that's the minimum targets are met for the NASDAQ, but it doesn't mean that we can't run higher. So the 100% target of that pattern here still waits at 13,313. So that's another opportunity before that 50% retracement from the latest drop we had at NASDAQ. And let me just have a look what the weekly is saying. That's our cycle chart for the weekly, and as you can see, we had at the middle of July that pullback here for that subcycle. We got that in that week quite well. I gave you that red resistance zone, and we can overshoot it just by a little bit, even to test that 61.8. That would be from the last drop, as I mentioned. And before we come back here into September, October, you see here's like a nest, that bottom nest of all these cycles. Somewhere between September and October. And I had another chart on the NASDAQ. Hang on. I gave you this chart on Twitter as well. It's a 1 hour time frame. It's also based on the cash market. And what you see here is a so-called bearish Wilbur wave wedge. You have 3 touches on that upper trend line, and it's allowed to overshoot here. I can't tell you really by how much. But what's important about this pattern is you get this target line when you connect this point here with a second touch on that lower trend line. And that runs presently at 12,000. And the question is just when that thing fires to the downside. As I said, the momentum turned into the upside, so we are most likely to run a bit higher in the next week and even the following week. And here you also see that I gave you that pattern quite early when I was posting that entry on Tuesday afternoon or evening, I think it was. And just have that pattern in mind. We have the same, by the way, in the S&P 500. I will give you this one in a little bit. Just wanted to show you the volatility of the NASDAQ, because I was posting that chart basically with that black track, and as you can see, it worked also perfectly fine. I was mentioning that this blue bullish Wilbur wave wedge is already active here. It came up and it pulled back as I predicted to activate that red one, because the red one was still missing that third touch on that lower trend line. And we can drop a bit further down here with the next week before these things pop. And I can tell you one thing: when they pop, it's the same in the VDAX and also the same on the VIX. Once this volatility is picking up, expect very aggressive and sharp moves at the stock markets, that they will probably go nuts. And we continue with the S&P 500. So we're going to continue with the S&P 500. It's a 4-hour time frame chart, and it's also that channel I gave you, like once we were already here. And you can see that move worked out perfectly. It broke through that upper boundary quite intense with earnings. And it finished off that ABC as a minimum target. Doesn't mean it can't get higher. And it also activated that bearish rising Wilbur wave wedge pattern, which has a target line presently. Let me have a look at 339.08. So that's probably a target we might see, not very likely next week, but the following week they will be very, very interesting. And we continue with that. We stay at the 4-hour time frame, but this one here is based on the cash market. And I gave you that big blue Wilbur wave wedge here like 2 months ago already, somewhere once we activated it, or even here before it came down here. And I was giving you that target line at 42.13 a while ago, and we're getting closer and closer. My first thought was that we are not getting above that red zone, but we got through there quite intense. And I changed my mind actually yesterday, and I'm pretty convinced that we run into that target line now, and into that blue zone, and that's a very, very strong resistance up there. And you see we have that wedge pattern here as well in the cash market, and you can see it even better once we go down to like a 1-hour time frame. And have a look at these cycle brackets. We hit this one here quite precisely of that sub-cycle. And we probably just see from here, beginning of next week, a little tiny pullback and another breakout into that blue zone to hit that target line as well. And that may last another week or two before that sub-cycle turns in with the big red one. That's a very likely scenario in my point of view. And once you have a look at what I want to show you, the VIX. And this one is, you can't get it more accurate than that. I gave you that chart somewhere when it hit that lower trend line again. I said we'll probably see another spike up before it comes down and they crush the VIX, and that's what happened. They most likely come down a bit more before volatility picks up again, and the so-called triangle pattern. I gave you actually the targets now to the upside. If this one continues to go further down, we probably have to calculate on the downside targets as well. That would be, if I'm right now, 32% of that highest inner amount from that pattern. So probably I give you an update on that on Twitter on Monday. And I had a daily chart as well, which was quite important because we hit major resistances. The same story as at the Nasdaq. We went through that 50 MA, and I said most likely we're going to hit the 100 MA, and that worked quite well as resistance. And we have already, beside from that positive divergence we had here from the bottom, you see here a low and you see a much lower low, and I didn't really count down as much. We have the exactly same opposite now. let me just put it back here, that RSI keeps rising, and we had a much lower value. Let me just make it a bit bigger for you. A much lower value than in June, but we haven't really, broke through these highs we made in June. So that's a current negative divergence we have right now, and we have to see how this thing develops. The next negative divergence would be once we compare these price levels to these highs with the RSI, and you see we actually overtook it already, just by a little bit here. So which means we're running into another negative divergence on the RSI, and we are not getting close to these highs over here. But that's a different story. We will just have an eye on that, and I will keep you informed on that. So we continue with the DOW. 1 hour, no, it's a 4 hour time frame, same channel as at NASDAQ and the S&P. It broke out here as well. It reconfirmed that upper level, and then it just continued rallying. The minimum target as an ABC move is completed, but it doesn't mean it can't get higher. All these targets here from 33,220 all the way to 33,747 are possible within a week or two. And I have that daily channel with that head shoulder pattern, which missed out the 100% target. It reached its statistical target quite nice, and I gave you that bullish Willow wave pattern with its rising target line, and this one runs presently, it doesn't give you a value, at 33,547, and when you remember these price levels from the previous chart, it fits perfectly into that area. And as you can see, it's breaking that neckline again of that head shoulder pattern, and then it actually, in my point of view, it's taking too much time now to accomplish that pattern. So I will take out that head shoulder pattern, and we'll look for another bearish thing if the markets turn around. And that's a weekly chart from the Dow Jones. You see these cycles here, and you see these sub-cycles. I was giving you these declining volume bars on these bigger pushes to the upside. The volume picks up because of smart money. We talked about that at the beginning of the video, but there is still, compared to that last red bar, that divergence in volume. The positive thing is that we had that positive RSI divergence on the weekly. The best case would be if we drop down here, that we maintain that positive divergence on the weekly time frame. That would be a very, very bullish scenario. And talking about these cycles, this one you suggest, like we made that low here at the 11th of July. So that sub-cycle probably found its bottom here. And we also could divide that into half cycles. And then we still have a bearish cycle, because this one started over here, made a half cycle low over here. So we are just in a temporary rally, and the low here, which this cycle suggests in October, should find a bottom below that trough over here, because we are on the bearish side and in the left hand translation already. As you can see, I was more or less expecting a sideways or like a range in July and August. It's still working out if we are not breaking through these resistance zones. That 61.8 from that last drop at 33 to 61. That's also a very interesting level to watch for next week. We're going to have a quick look at the big techs now, starting off with Apple. I gave you that chart at the beginning of the week on Twitter. It's a 2-hour time frame. You see these two bearish Willow wave wedges, and it followed my path quite well until earnings came out, and then we just pumped through that black resistance line here, that bold one, and hit that upper boundary of my target zone here. That was actually my extreme zone already at $162. But yeah, it just gapped up here and parked there on Friday. It might run up even higher into that 166 area before we start dropping or pulling back at Apple. And once we have a look at the weekly, you see that big bearish wave wedge pattern, which has a, a target line at $100 right now. And you see that decline we had, it came down already almost 30% from the all-time highs. And I was assuming that we run into that red resistance zone. It did quite intense under, that's very important, declining volume. And once you have a look at these cycles here, and these intermediate and these sub-cycles, they all suggest a nesting bottom at the beginning of September. That may last into mid-September or even October. So we might run up here again, and the most extreme, we hit that upper trend line of that wave wedge at 171 before it drops again. But I'm pretty sure even Apple isn't done. All these cycles suggest that, and yeah, just keep that in mind on the bigger time frames. That thing isn't really over. It turned somewhere in the nowhere around here, and yeah, as you can see, the markets are kind of crazy. Some big tech companies had good earnings, some had good ones, and they all pretty much rallied up. Microsoft was the other big one. We have also here a daily chart, and we have that bullish bearish wave wedge and that shoulder pattern. It broke quite intense through that neckline again. We still have open targets of that shoulder pattern here at the 238 and 203, which is the 100% target. It still fits quite well with that target line. We might, are these correct? Nope. We might run into that retracement box between 282, which we basically pretty much reached already on Friday, all the way up to 308 before we see another leg to the downside. And once we check the weekly, we also see these cycle brackets in here. It suggests a low at the end of August, so a bit earlier than Apple. So that's even quite possible. It's basically the same what Apple did. It corrected 30% and now it started to push. Here we have already that bullish wave wedge pattern active at Microsoft. Of course, it could run straight up here, but that cycle, if you ask me, that was a sub-cycle low, and we are still on a bearish cycle because that was a perfect match here, and we went below that low here, and most likely we're gonna undershoot that low again somewhere on sometime in late summer or in autumn. Let's check. What do I got? NVIDIA. Shoulder pattern, and we didn't really get up there. I was giving you that little bullish wave wedge with its target line. It didn't really hit that yet, did it? No, not really. So we might hit that target line before we come down again. Probably have to change that pass here a bit. So we moved that all the way up here, and NVIDIA, we had already a 57% drop from these all-time highs, and here down here are still missing targets of that shoulder pattern between 136 and 64. I don't really think we moved down here, but that we get into that area down here, it's actually likely to happen. Advanced micro devices, very nice shoulder pattern, and we consolidated here like in a bearish wave wedge. It hits that target line very nicely, drop of 55%, and we are still missing out these targets down here between $66 and $34. We might run up here to retest that neckline before we drop at AMD, and as you can see, the weekly here with the cycle bracket suggests also a low in September. So we might rally up here again before there's another sharp drop at advanced micro devices. And this Alphabet, don't be surprised about the price. They had a split, so we have new price levels here, and we had that rounding top and that Adam and Eve pattern, which reached its statistical target, and the 100% target is still open. And Alphabet basically just bounced off its 50% retracement, and now we are moving sideways. So we have to be a bit more patient here on this one. And this one is a bit more tricky because we found a low at when was it? On the 26th of September. It's actually a daily chart, and it suggests a bottom at early August. So this one might turn around even earlier. They didn't really have good earnings, and they just kept pushing up. Well, they participated in that rally after earnings, which didn't really make sense. But it's right now buying the bad news. Tesla. Someone on Twitter asked me to have a look at it. I gave him that triangle. I said it hit that statistical target perfectly. There's still a 100% target open. And I also mentioned that this wedge in blue, it became active now with that third touch. So we can actually change these lines. And so you see that better. It's a rising wedge, and it might, continue even up here to these 100% targets. And there's also a bearish Wolver Wave wedge here with a very steep target line. I have no idea if we get down there, but keep in mind that this wedge is bearish as well, and we probably hit these targets before we drop at Tesla as well. And what do we have? Meter. It's a very big chart on the weekly. We dropped already almost 60%, and you probably notice Meter isn't really one of the big 5 or 6 anymore. I think they're not even in the top 10 of the Nasdaq when you compare the weightings of these stocks. You see that very big flag we had here, which dropped to the downside, and usually they are revisiting these lows. That's somewhere in that 137 area, and that might be actually possible if the whole market turns around again. Keep that in mind at Meter. Very, very bearish looking chart at the moment. So that's it. Went a bit longer, 33 minutes. We covered basically everything. I hope you like this one. So subscribe my channel, or give me a thumb up. You can even leave me a nice comment, or if you want to see something else, just mention that in these comments, or follow me on Twitter for like daily updates. I will put the link in the description below. I wish you all the best. Have a nice weekend, and I see you on Monday. Bye bye.